The auditor of Reliance Power has raised doubt on the company's ability to stay afloat. This doubt stems from the company's high loss and liquidity crisis at the company. For the March quarter, Reliance Power posted its biggest quarterly loss of Rs 3,560 crore. The high loss was on account of impairments which largely stemmed from lack of cash for its Samalkot power and unviable solar unit Rajasthan Sun Technique. In terms of liquidity, the company's current liabilities exceeded its current assets by Rs 12,249 crore at the end of March. What that means is that even on sale of all of its current assets, it would fall short by more than Rs 12,200 crore to service its short-term debt. In its report, the auditor also raised doubt on the going concern ability of two of its subsidiary companies. The first subsidiary, Rajasthan Sun Technique Energy, was facing liquidity crunch, loss, and continuous default, which led the auditor to raise doubts on going concern. In case of second subsidiary, Samalkot Power, it was because of its dependence on subsidiary to execute power project in Bangladesh, and it's in hunt of vendor to sell its asset worth Rs 1,600 crore, which will lead to future cash flow. Moreover, US Exim Bank, one of its lenders, had recalled its outstanding loan facility, and in FY19, the company wrote off power property, plant and equipment worth Rs 276 crore. The auditor's report also had two qualifications on the company's financial statements. The first being in regards to depreciation. Reliance Power used a different method to compute depreciation than the one used by its subsidiaries, which is not as per the standard. So the auditor mentioned that if the depreciation method used by Reliance Power was the same as its subsidiaries, its loss for the year would have been Rs 501.91 crore higher. Reliance Power disagreed with the auditor's opinion and said it had reached an opinion from a reputed legal and accounting firm that validated their practice. The second qualification pertained to an intercorporate deposit that Reliance Power received from related parties. The qualification said that the company did not take audit committee approval. Reliance Power, in reply to the qualification, mentioned that it does not have any influence on the director or operations of the company who lent the money. In response to doubts raised by the auditor, Reliance Power in its financial statement said that it expects to generate sufficient cash on time selling gas-based power plant equipment, realization from regulatory arbitration claims, and sale of other assets from certain subsidiaries. And it is also confident of restructuring loans.